morning. Today is December 20th, 2023, and it's 5 days till Christmas, which is this coming Monday. And I'm back with another quick edition of the live show. And I know it's a busy time of year for everybody, so I'm not sure that I'll be doing a show next week. We have company in town. It's basically a holiday week. The last week of the year, the market tends to be really super dull, and so it should be interesting. But we've had quite a remarkable run up in the market here lately. Take a quick look. Here's the uh, Here's the S&P 500 with just a 200-day and a 50-day. But man, this thing is extremely overbought. Let's see, I have let me pull up my handy dandy chart here that I've been using most of the year. You can see that yeah, big giant sort of cup and handle that I talked about a few times over the year, over the recent, I should say. Looks like a big cup and handle, right? And there's the handle. Amazingly enough, that kind of deep dive there was sort of unexpected. It didn't really break the pattern, but it made it a little more suspect. Everybody was when that or support broke there, that little dip. I think really got a lot of people bearish, right? You remember the CNN fear and greed meter was like on extreme fear and all that, and then it had broken through the support and things were looking pretty dicey then. The turnaround is just absolutely miraculous, right? And the funny thing is that there was back in 2022, there was some pretty significant rallies, two of which, especially this one, I believe it was the summer of last year, 2022, that everybody thought the Fed was going to pivot. And we got a tremendous market rally out of that. Now, all of a sudden, as you recall, the Fed meeting was last week, and all of a sudden, out of the blue, now Powell is talking about rate cuts, right? So the market's pricing in a bunch of rate cuts for 2024, which is basically, a week and a half away. And it's pretty outrageous. There's a lot of people saying that, it's politically motivated and that type of thing. And it is kind of weird because, inflation, the rate, I should say, of inflation has come down, which means that everything's still going to be expensive, but the rate of inflation's come down, and so, it's very suspicious because it's certainly not back to 2%, and, the core PCE, which is what the Fed focuses on, is still at like 4% or something, so it's almost like they're giving up, they're giving up on inflation and or thinking it's going to come down, but it's just kind of odd. Everybody seems to agree that it's a little premature to talk about cuts, but then again, there's a lot of pieces to the puzzle, one of which is the the interest on the national debt, which is 33 trillion headed to 35 trillion or whatever. And so, at a 5.5% Fed funds rate, that's pretty significant. So, there's a lot of things going on, and of course the calendar's getting ready to flip over. But this latest sort of move, especially the move, just from underneath this resistance area, the breakout of that, and it had already made a huge move off the lows, right? So a lot of this initial move up was kind of a short squeeze, oversold conditions and that, which reminds me, this is what I wanted to take a good look at today, was the RSI. So check it out. Over here, like at the lows at the end of October, you can see how the RSI was, sort of poked below 30, right? Which indicates an oversold market. And so, we got that rally going, and I think that initially it was started off as kind of a short squeeze. I seem to recall that a lot of there was a lot of shorts and puts and all that, and everybody thought that the market was going to tank. It was below the 200-day and the 50-day and all that stuff. But anyway, and like I said, the sentiment was extremely negative down there. The RSI was at the lower towards the lower bound, but short squeeze and then technical breakout. Seasonality, I'm certain has a lot to do with this latest run here. But the thing that really stands out to me at this point is the RSI 14. Standard technical indicator on whether the market's overbought, and you can't, obviously overbought markets can get more overbought and vice versa, but man, when you see the RSI over 70, you think to yourself, well, the market's overbought. And we even talked about that back over here, right? But this latest little push here is just incredible. I mean, and it's not something that we haven't seen in years past, but it's still amazing to see given all the macro backdrop, I should say. I mean, there's a lot of issues and problems out there, and I mean, we still have just a whole list of different things that in theory should not be supportive of this type of market. So what we have now is extreme overbought market. I mean, just about as extreme as it gets on the daily time frame. So I guess it would make sense now to look at the weekly time frame. Anyway, really crazy overbought market. Part of it is season, part of it's short squeeze, part of it's technical breakout or whatever. Part of it, this latest part here, I believe, is seasonality. And of course, now we find ourselves at an extreme. What I wanted to look at was the weekly. Let's see if I got a weekly with the RSI here. There's my big sort of go-to weekly chart, and as you can see, the S&P is knocking on all-time highs, and I believe the Dow and NASDAQ are already at all-time highs. But what nobody really talks about is if you go to this high over here was like 48.18, I believe. If you go to the CPI calculator and you see what 48.18 was back in January of 22, you'll see that in theoretically, the market needs to hit like 5,300 for an inflation-adjusted new all-time high. But here's something to note is that the weekly RSI, and this, quite frankly, this shocked me a little bit when I looked at this. The weekly RSI is not even quite at 70, and you can see back here this prior peak over the summer, it actually looked like it poked above 70. So, and back to what I said earlier, if you look back at like 2021, you can see that the weekly RSI can indeed get overbought and without really getting much of a dip. Right, so can't really go by too much on this weekly RSI. But however, as I said, in the very short term, that daily RSI is jaw dropping. Right, you don't see that very often. So let's take a quick look at, and actually I want to go to my marked up chart here, because the big a lot of this has to do with seasonality, I believe, and money flows and that type of thing, and front running, the Santa Claus rally and all that. So this is pretty amazing though, because we've looked at we looked at the Russell chart, and even back over here, this was looking really sort of dicey at the October lows here. And of course, we've been talking about how it's been channeling in this big giant channel, kind of like it did it back over here. In 2021, we were looking at, this big channel, and then It was pretty crazy, really, because it seemed like it was really super boring. That was a little bit tighter. You can see the width of this area here at the beginning of 2021 was kind of a tighter channel, and it was kind of boring at the time. Um, and so, this, well, and then there was the false breakout, but this channel we've been seeing for most of, 2022, honestly, and all of this year. The and I think, when I was a couple of weeks ago, I was talking about, how it had moved from the bottom to the top of the channel, and this one in particular, like July of 2022, made a quick move from the bottom to the top. And then consequently, it made a really pretty quick move. And, this is there was other times where it kind of waffled, halfway in between, or, sort of bottomed out and consolidated. But I would say, from the summer to the fall, and then from the fall to the winter, very significant and exaggerated, really quick moves. And so, interestingly enough, the Magnificent Seven rally has indeed broadened out a bit, as you can see by the Russell. But boy, the Russell's got a long way to go to get back to the prior highs, which were back in 2021. So, but right now, I mean, animal spirits are running rampant. Let's look at ARK. This is, as you know, sort of my proxy for, high momentum. I don't know if I'd say growth stocks, but I'd suppose you could characterize the type of stocks that are in this as growth stocks, new tech stocks, high momentum, but they're basically, let me save that. Oh, actually, I guess I won't save it because I already have ARK in my list here. But anyway, you can kind of see what's going on there. Pretty nice bottoming pattern. Again, from the lows, from these lows in October, it's just a straight 45-degree angle run up. So back at the beginning of 2023, beginning of this year, there was a similar run up in magnitude and duration. And you can see what happened after that. It was months and months and months of sort of consolidating and giving back about half the move, and then another leg up. So very interesting to see. Let's see, what's that? Zoom. I always think about Zoom when I think about ARK, because it's I think it's still one of their top holdings. Yeah, look at that. Wow. That's interesting. So, I mean, while this is, it's made a tremendous move off the lows, the larger pattern here is still a bottoming pattern. It actually it looks like it has some potential. It really does, much as I hate to say it. So this looks like it does have some potential, and it could be, obviously, when you look at a chart like that, you see where it came from. And so if you showed somebody, based on sort of like what the chart looks like if somebody didn't know what this is and looked at this chart, they would think, well, it's not looking so hot. It's got some work to do or whatever. But when you zoom out to that weekly chart, a couple years back, it just kind of shows the potential. Speaking of which, some of these stocks let's see, PayPal comes to mind. On the weekly chart, not all that exciting, but on the daily chart, some of these really super beaten down stocks have had. I mean, this still looks like a downtrend to me. But percentage wise, off of the lows, and see, that's the other thing is percentage wise, these busted stocks that have come down from insane valuations or whatever. It's going to be interesting to see. I mean, with the overall market clearly overbought, and this run we've had, it's like a game of musical chairs, right? And so it's going to be interesting to see how some of these stocks do when the inevitable pullback comes. Um, what we're looking at now is kind of an end of year seasonal blow off top of sorts, because there's just no way. Yeah, here's another one. So when you look at these, I mean, overall they're still in downtrends, but these moves off the lows that basically all started around the same time are just phenomenal. So, and I think it's the oil stocks. What what am I trying to what am I trying to XOI? Huh. XLE. Here we go. I was trying to, off the top of my head, pull up ETF for the energy stocks. I believe the energy stocks are kind of the laggards here, and so, as you know, oil has been going down, which brings me to another point here. So, I mean, look at the price of oil here. Let's go to a weekly chart and look at this. So the Fed is kind of, they're basically, by signaling that they're going to cut rates next year and that they've pretty much peaked out. Although, they left the door open, obviously. Um, and so, yeah, everybody's scratching their head thinking, well, this is politically motivated. We're headed into an election year, and so the market's pricing in rate cuts and that, and they're kind of, they're pretending to, subtly, they're pretending that they're declaring victory on inflation and that it was going to keep trending down and all that. But I mean, if you look at this, so, since they embarked on the rate hike cycle, the price of oil has come down significantly, and what everybody's worried about now, or what the macro people are worried about, is, and quite frankly, the price of oil looks like look at that. That's a 200-week moving average, real textbook sort of pullback right here, and of course this time of year is always weird. It's always weird, but you've heard all this. If you watch the news, you've heard all the stuff going on over in the Middle East as far as ships and all that type of thing, and so I mean, this is an ideal setup. Oh, and you can't discount the idea that, and I forget when they started draining the Strategic Petroleum Reserve to get the price of oil down, but it was back over here in 2022. When oil was over $100 a barrel, right? They started draining that, and of course, that's can be construed as politically motivated too. And anyway, to me, it looks like the potential for the price of oil to reverse at some point here and go back up exists. And so there's gonna be a lot of weird stuff after the first of the year. It'd be amazing to me if they can keep this rally going and hold these levels on the market up here this time, till the end of the year, because there's a week and a couple of days left. But in the new year, the tide may turn, so to speak. And so to me, oil looks like it's set up for. It's still got a little ways to go. I mean, it may vacillate here, like around 70s, like the over and under here, and it may vacillate a little bit around here, but when this trend line breaks and it's kind of squeezed between the 50 and 200 on the weekly here, this thing breaks back up and starts and has another sort of trend like this, that's going to put sort of a damper on the idea that inflation is whipped. That's what bugs me is, for one thing, I mean, the price levels are going to remain high. I think I read the other day that food at restaurants up 25% in the past few years. And so everybody knows that, the price of most of the stuff at the grocery store. And I think I read that on that last CPI report, they said auto insurance was up 20% or something. And so, there's been just tons and tons of price hikes, and the general cost of living has gone up probably 25% in the last few years. So, I mean, Fed really dropped the ball. And of course, we all know the reasons, for that and what they did and why inflation. But for them to, prematurely declare that the rate of inflation is over is a little suspect. And so we're going to have to wait and see. I mean, nothing's going to happen in the next couple of weeks or few weeks or whatever, but this is something to keep an eye on in the new year is the idea of like a resurgence in inflation. And so it's Fed always says they're data dependent. So it's going to be pretty interesting to see that, if inflation starts to tick back up, maybe these rate cuts that the market is pricing in are premature, just like, I talked about a minute ago, the rallies that we had back last year based on the idea of a Fed pivot. And so the other thing to keep in mind is, the Fed typically cuts rates when the economy is slowing down or we get some sort of economic shock or whatever. And so, I'm sure you've seen those charts where when the Fed starts cutting rates, the market tends to go down and tank, right? So I read somewhere something to the effect that, like a quote to the effect of, there's never been a Fed rate hike cycle that didn't end up in a recession or something breaking. And so that's, something to consider. But, we're still at the boom, apparently at the boom part of the cycle. So, here's the cues. Here's the cues at an all-time high, the Magnificent Seven. This is one of the more beautiful sort of cup and handle patterns. And we talked about that quite a bit this year, the idea. And I even said, way back towards the beginning of the year, and especially back over here, that it did sort of look like a giant cup and handle, regardless of, if you just looked at it objectively, regardless of, the overall environment and why the market was sort of acting really nasty over here. I mean, these were kind of some nasty pullbacks that we experienced from the summer to the fall, but it's pretty amazing. And of course, the Magnificent Seven is just on a tear. But now I'm starting to see people talk about valuations more too, and so that's something to consider. I think the PE on the S&P is at 20. The PE is at 21 times forward earnings for 2024. So it remains to be seen. Lots of exciting stuff going on in the tech world, though, with the AI and all that good stuff. And it's pretty amazing. I mean, it's kind of, there's been, I've lived through so many of these market fads, right? 3D printing, and I mean, just so many of them. Peloton, remember, like, I could spend a whole show going over like fad stocks that and like themes, right? 3D printing, years back, what was it? Rare earth minerals. Remember that one? And there's just been so many of them over the years that were kind of, market themes, kind of like AI is now. Remember GoPro? Remember GoPro cameras and Amberilla and all that stuff? So anyhow, my point is that we got kind of an AI thing going on now. There's GoPro. You'd have to. I'm showing my age here because the fad in GoPro was back in 2014. IPO'd and this and that. But anyway, you guys remember the chip stock back then? The chip stock back then was Amberilla, right? That was like 2015. Interestingly enough, it had another huge resurgence a few years back, but you can see that, there's still a lot of busted .com looking stocks out there, but Nvidia is the current market leader as far as that goes because they're into the AI chips. And look at this, pushing on. Quite frankly, this thing could break out and take another leg up just based on this pattern. It's an interesting looking pattern. I mean, there's sort of well, quite frankly, I mean, I could draw a channel on this thing. Let's see what this channel thing looks like. There's I'm not, oh, there it is, huh? Yeah, I'm not really used to, not really used to using this particular, whoops, indicator. So that's kind of cool. That's a cool little drawing tool there. But, well, that's kind of weird the way, I kind of like that. I kind of like the way that you can adjust that, but this is the first time I've ever actually clicked to draw a channel in stock charts. I should probably use this more often. My question is how do I adjust it? Huh. Well, that's kind of interesting. I want it to be horizontal, but I want to make it wider. Huh. Well, anyways, you see the idea here. Get a break out of that. I mean, and there could be another trip to the back to the middle or the bottom, but I think my whole point here is that the AI stocks, or just AI in general as a concept is pretty valid because I've seen a lot of really cool, interesting stuff. And so that, may be a game changer to some degree. If nothing else, it's going to replace a lot of jobs, right? So it's definitely something to keep an eye on. And quite frankly, I mean, you can do amazing things with it. Just just in Bing or whatever, there's the Copilot, and you can make some pretty cool pictures and all that. So I think that's while it is sort of a fad, I think it's a fad that is probably here to stay. And so that'll be something interesting to take a look at in the future. And of course, the rest of the stuff, like Apple, Apple had some really bad news lately, and this is one of the things, the economy is not the market's not the economy, and it's all about flows and perception, and not necessarily the market, obviously, and individual stocks don't reflect what you would think would make all that much sense. And of course, we've seen it time and time again over the years. And so, it's the old rising tide lifts all boats and all that good stuff. But, if anything, I think that any of the late comers to this rally are going to be disappointed because I would guess that the smart money, and I've seen this with insider selling, right? The smart money is using this opportunity to lighten up, I would say, because at least in the very near term, because the market is headed for some sort of a pullback. And I'd mentioned this last time I was on the show here that you're also in one of these situations where nobody wants to sell but for tax reasons. Nobody wants to sell, between now and the end of the year and have to pay tax on capital gains in April, so they're just going to hang on, or they're going to, sell calls against their positions or whatever. But there may be a price to pay for this this sort of insane. Look at this. 1, 2, 3, 4, 5, 6, 7. We're working on 8 weeks in a row of up markets. 8 weeks in a row, coming off of a point where everybody was the sentiment was extremely negative. So like I said, the fear and greed indicator, it's gone from extreme fear to extreme greed. And this kind of move here, coupled with the RSI on the daily chart being in nosebleed territory, it's a game of musical chairs. So, what they always say, when while the music's playing, you got to keep dancing. So anyway, hey, I hope everybody, I know it's a busy time of year. Uh, Christmas is this coming Monday, and so the next few days and this weekend are going to be kind of crazy. And then the week between Christmas and New Year, especially with Christmas being on a Monday this year, the week between Christmas and New Year is always kind of like, it's a holiday week. And so I expect the market to get really super dull. It's already getting a little bit kind of dull, like the ranges have tightened up, and the market intraday seems to sort of drift around that type of thing, and I expect things, maybe the next couple of days there'll be a little bit of action, but next week is the week everybody's gonna, or at least most people are just gonna take it easy. So I don't expect a whole lot of excitement, and it's going to be, next year is going to be really super interesting. 2024, it's an election year, right? And so as much as I loathe politics, there's going to be a lot of that going around, which I'm not looking forward to. But as far as the market goes, it's going to be interesting to see, you know, how inflation actually, how the data looks and what the Fed's actually going to do, and whether they're actually going to start cutting rates. Like I believe, one of the Bank of America or something said that they expect the first rate cut in March. So, and the funny thing is, the market itself is supposed to be the smart money, and it's been pricing in rate cuts. It was pricing in pivot, and then it was pricing in like, six, seven rate cuts or whatever next year. And so it's just kind of crazy because, and I suppose, each 25 basis points is considered a rate cut. So, hey, who knows? The Fed, this last rate hike cycle was, one of the sharpest, fastest ones ever. So, I mean, interest rates went from, basically, zero, a quarter point, to 5.5 in a straight line, with some 75 basis point rate cuts along the way. So like, incrementally cutting or whatever to kind of save the market is something they could potentially do. So we'll have to see. The market seems to love the idea of rate cuts now. But watch out for the overbought conditions, and watch out for overvaluation. And so inevitably, the old saying, for every reaction, there's an equal and opposite reaction. Um, I'll tell you what, if the market was dropping at the speed which it's rallying right now, people would be panicking. I mean, this is like the proverbial melt up, to be honest with you. I mean, I'm looking at this chart here, and I'm trying to find, another melt up of, 6, 7, 8 weeks in a row. The closest thing is this one. This is only 4 weeks over here, right? So anyway, I hope you all have a great holiday season, good Christmas, Merry Christmas, all that good stuff. And then I may see you back here next week, or I may see you back here at the beginning of the year. So enjoy. Hope everything goes well, and I will see you next time.